Up really nicely. We're going to be discussing a lot of the issues popping up in housing development in Berkeley, definitely associated with AI, startups, and industrial and manufacturing. So I figured I'll introduce myself, and we'll go down the line, introducing all of our panelists, and from there we can dive into the questions. So I'm Nick Dubroff. I'm a land use partner at the Allen Mackins Law Firm in San Francisco. I get approvals and entitlements for all manner of projects, housing, mixed use, commercial, industrial, throughout the Bay Area and in California. So with that, I'll hand it off to Derek.
Yeah, my name's Derek DeLonzo. I'm with West Builders. I was born and raised here in the East Bay, and I've personally built, a few projects here in Berkeley as well. So very personally and professionally invested in this part of town.
Hey, good morning, everybody. I'm Jordan Klein. I'm Director of Planning and Development for the City of Berkeley. Great to be back here again with so many of you. I imagine a lot of you were here last year when we did this as well. Thanks to BizNow for bringing us all together to talk about real estate in Berkeley. I've been with the city since 2014. Previous to that, I was with the city of San Francisco. In 2014, I joined the city as the Economic Development Manager, and it's been my honor to serve as the city's Planning Director since 2020.
My name is Amir Massey. I'm a Berkeley resident and have developed some projects here in Berkeley and around the Bay Area. And thanks for having me.
Great. So I'm going to piggyback off of the mayor's comments. There's many big changes afoot in the Bay Area, particularly with many imminent IPOs, a lot of AI energy. So my first question for our panelists is, how are these regional growth patterns in the innovation economy and tech affecting residential development in Berkeley?
I can go first and just set context with the numbers. I'm sure a lot of you know this already, but we have been producing more housing in Berkeley per capita than just about anywhere else in the Bay Area. And I haven't seen statewide numbers, but I imagine that we're in at least the 90th percentile of municipalities statewide in terms of housing production per capita, which is a big change. For several decades, there was little to no housing production in Berkeley. But over the past decade, we've been permitting about an average of about 500 new housing units per year. And in a city with a little over 50,000 housing units, so we're adding about 1% to our housing stock every year. And that's a big deal. And that's really positive in a lot of ways. Whereas a lot of the region has experienced rapidly increasing rents, Berkeley's rents have been relatively flat over the last few years. Yes, exactly. So that's a double-edged sword. Like, it's good, that's what we're aiming for, right? Reducing the cost of housing, but it's challenging because it undermines the ability for new projects to get financed. So the numbers for 2025, people tell me all the time, like, gosh, Berkeley, you still have cranes in the air. You're the only city where we still see cranes in the air. So we permitted 463 units in 2025. So a little lower than our average, but pretty much in line with our average. We did see a pretty significant drop in the number of units entitled. So we entitled 470 units last year after averaging about 1,000 units entitled for the several years before that. So that indicates a little bit of a slowdown in the pipeline. Looking ahead, I think that we're going to continue to have strong production numbers. We have a lot of entitled projects that are waiting to get financed. And if even only a handful of those projects succeed in securing financing, and some of them are really big projects too. And so I think we're going to continue to have strong permitting numbers. I'll stop there. I think we'll have an opportunity to talk more about what there is demand for and what kind of products that we're seeing more momentum for.
Yeah, I mean, as a Berkeley resident, I actually applaud the drop in rent. I mean, I think it was an untenable path to have, a 3-bedroom being rented for $9,000 a month by students, which is where we were. And that's not a livable city. And I think especially in the downtown, you saw the effect of a lot of developers coming into this space, build student housing for the purpose of taking advantage of what appeared to be, ever increasing rents. And then in 2024, actually the market did kind of what it was supposed to do, which is a bunch of units got delivered and the rents dropped. And that's what, the argument has always been, if you build more housing, you can start to see some sort of a decrease or moderation in rent growth. I think the issue, and I'm going to bring it back to just sort of like this whole idea of the innovation economy, is how does Berkeley now pivot from being what I would say is predominantly sort of a student housing market to more of a daytime economy that can attract people who are looking for a soft landing from San Francisco and other places where I think prior to the pandemic we saw a very good flow of people who were dual income, no kids, and other people with small families who wanted all of the cultural and other sort of interesting parts of San Francisco without the hassles. So they were coming into Berkeley. And then it kind of came to a screeching halt during the pandemic, and what happened was that the students filled the void. And so now we've got a bunch of projects built. The students are coming into the downtown. I think we need to embrace them as opposed to, complaining as my hair gets grayer that, these old young people are taking over the downtown. Let's figure out ways for them to spend the discretionary money that they have, but at the same time, I think pivot to capturing some of the energy that's coming out of San Francisco and other places for people who want some of the wonderful cultural attributes that Berkeley has.
Yeah, I was one of the young professionals that moved further east during the pandemic. So I think it's definitely a topic of how do you have this incredible young talent in Berkeley, and then you keep that those people there through their young professional careers. And I think you're starting to see some more creative models of just not student housing, but condos, co-housing, workforce housing here and there, things. Different ways of the market moving besides just being student focused. So I think that'll be really important here in the future.
That's great. That kind of ties into our next question, which is we've talked a little bit about student housing, how Berkeley is evolving. So now, beyond its traditional identity as a student housing market, what are some of the housing product types that you're starting to see? Derek, we can start with you again, and we can go back down the line.
Yeah, I think we're seeing more, in terms of projects that, are getting built now, more of the condo, some of the smaller multifamily projects, co-housing, some of these more creative housing types is what we're seeing. A little bit less of the larger scale projects that are having more of the difficulty on the financing and really breaking ground.
So I'll throw another number at you. I saw that median sale price of single-family homes over the last 6 months in Berkeley has jumped from 1.5 million to 1.9 million. Yeah, it's okay. So that's really rough, particularly for people who are trying to buy their first home. When we look at the demand and pivoting from a student market, I think that's particularly relevant to ownership housing. I think there's a huge opportunity for smaller projects. Thankfully, there have been recent policy changes at the local level and the state level that facilitate more ownership housing and more middle housing, so medium-sized projects. And we're seeing a lot more interest in that. It hasn't generated huge numbers in terms of numbers of projects and units, but I'm seeing a lot more and hearing about a lot more interest. I just met a developer today in the other room who's saying, oh, I'm interested in pursuing middle housing projects in Berkeley. And some developers who historically have done larger multifamily projects are now doing SB 684, 5 to 10 unit projects that are targeting the for sale market. And so I think there's market demand for it for sure, and we're seeing that in the types of permit applications that we're getting.
Yeah, I mean, I would say I think projects under 50,000 square feet will be easier to finance. For sale projects using 684 will be more prevalent, especially I think in areas like West Berkeley. We have a project there that's doing the same, but those are significant. Over time, those can be a significant increase to the supply of ownership housing in the city. I think, we have over the last 6 or 8 months, and I think Patrick, who's going to speak as one of the panelists, has really gotten behind this idea of finding a way to do a local density bonus project that allows ownership housing to proceed at scale in a way that you couldn't do if you used the state density bonus project. And it's really sort of fee and otherwise neutral to the city. It just allows for the opportunity to fee out of including the affordable units in the project itself, which I know is controversial for a lot of people. But I mean, I think the idea is, these are dollars that you need to shepherd toward the things that you care about if you're the city. So if you care about, if you want to take those dollars and put them into an affordable housing fund so that you could deliver more affordable projects, that's where those dollars can go. So yeah, I mean, I just would come back to, I think, smaller projects, for sale projects, and potentially, non-residential projects that allow the capture of some of the energy that I think we're talking about with respect to the city and the university coming together. Oh, and Elvis is in the building.
Please,
What should I
welcome.
do? Thank you.
Go ahead and give yourself a quick introduction, and we'll just let you jump in.
Well, it's very rare a BizNow program runs early, so I apologize for being late. Great job, guys. So I'm the founder and CEO of a company called Art House Partners. We have historically specialized in what we call entry-level housing. So we span the whole ecosystem from student housing, which is predominantly, I guess, why I'm sitting here, workforce housing, where we were born out of, and affordable housing. We, as of today, run about 4,800 units, beds, or residences from as far south as San Diego to as far north as Sacramento. And we've grown by about 25% this year. So it's a pretty exciting year for us, growing a little bit more by acquisition than by development. And we're very excited about our role in the Berkeley student housing market.
Great, thanks.
Oh yeah, and we're a vertically integrated platform. So we have about give or take 100 people from the development company, property management company, construction company, and insurance company.
Great. So my sense, hearing from our panelists, is housing is there's good production, there's good energy. The state housing laws are doing what they're intended to do, which is to facilitate housing. So I wanted to pose a question to you all and get your takes on it. Yesterday, the San Francisco Board of Supervisors adopted a landmark piece of legislation reducing the below market rate inclusionary requirements and slashing development impact fees by 67% for residential projects. But my question is, if housing is proceeding, if there's a huge pipeline, if projects are getting entitled in Berkeley, how would such an amendment play out here, or would it even be necessary? What would you see as the sort of near-term consequences of some similar type of legislation?
I personally don't think that in Berkeley that we've had the same kind of regime in place. So you're not going from as high of a baseline to an adjusted baseline. That said, in Berkeley, we've had a lot of projects getting entitled, but I believe we're going to have a production cliff coming because it's been much harder for these projects to lease up. So, I mean, the real thing that Berkeley needs is we need the university to enroll a few more kids, right? We can sit around in the planning department, building department, do what the hell they want, but if the university decides not to grow, all of us are going to be out of a job.
That's harsh. I do think that obviously whatever happens to the city of Berkeley is going to be tied to the future of the university itself. But I think that the idea that we're always going to be tethered to the university as growing its population is the only way that we're going to have economic activity on the development side, I think that just needs to get revisited at some point. That, you know, we need to be doing enough to attract adults as well as kids to the downtown area. And that will diversify not just the base of daytime population and everything else, but I think it'll just do a lot more to make this an attractive place to live. I will say we're doing a project in San Francisco now, and the drop in these rates is meaningful. And it actually, not just from a financial standpoint, but I think it sends a signal to sort of a wider equity audience that says, you know, we're open for business in San Francisco if we understand that none of these projects are starting for a reason. That reason is that they're not economically feasible, despite the fact that you see over and over again in BizNow or whatever metric you want to use. Rents in San Francisco are astronomically high, but no projects are starting.
Not true.
They're not high.
No. I mean, rents in San Francisco as of June of this year have now gotten to about 10% above their 2019 levels in nominal terms.
Yeah, but in terms of rent growth, that is still meaningful to the
marketplace. That doesn't matter.
marketplace.
We're 20% below 2019 levels in real terms. So for every dollar I'm getting today, it's 80 cents compared to what I was getting 7 years ago. Meanwhile, my OpEx is up by 30%, right? So I think anybody who's referring to San Francisco rents as astronomical, rent growth as astronomical, is having a little amnesia about the fact that the rents fell by 40%, right? And the fact that we had 30% inflation over that period of time. And so when you compound those two things together, San Francisco does not yet have a developable rental environment. Forget the rest of the Bay Area.
I'm going to respectfully disagree. I think the issue is that in absolute terms, a livable city can't have one-bedroom units that are $5,000-6,000 a month and expect a broader audience of people to be able to live there. I agree that.
That's a separate issue.
But I think it's relevant. I think it's relevant because we're making the case to the market at large that San Francisco is ready to make changes for the purpose of attracting development. That development right now isn't happening because, like you said, both the rents have, even though they've gone up, they're closer to where they were. At the same time, construction costs are 25% higher than where they were in 25. So even if your OpEx has increased by some percentage, the real problem in getting anything started is on the construction side. So what do? If your capital budget is too high, you look for places to cut. This idea of being able to cut impact fees and being able to reduce the amount of affordable units that you build, these are meaningful things that the city itself can control, and so they're controlling their controllables. They are saying, these are the places where we can make a difference, and I think the market is picking up on it.
So, on that point, so at 20% inclusionary requirement, Berkeley is on the higher end. I think it's important to note that Berkeley does not have other development impact fees like parks fees or public safety fees or transportation impact fees, aside from the SOSIP, which only applies to downtown Berkeley. Most other cities have other kinds of impact fees. Berkeley concentrates its impact fee requirement towards that inclusionary requirement. And yeah, it's in the public interest, of course, to promote inclusionary housing, right? New market rate housing generates demand for housing for low-income people too. And so it's important that to the extent that our market can support a higher inclusionary rate, then it's in the public interest to maximize our value capture on that. That said, if we are in a place where we do hit that cliff, and I think to Amir's point, it would behoove the city to look at where, what policy levers it can pull to make sure that pipeline isn't frozen.
Can I say one thing just in defense of the city's position? San Francisco didn't really produce any housing from like 2019 to now. Whereas I think the city of Berkeley, specifically in the downtown, produced an enormous amount of housing. So you're starting from a different place. And I don't think the pain that San Francisco is feeling has been felt yet in Berkeley. but I think it's coming. And so it's a question of how do you get out ahead of where the market is going to be going in its view of the city of Berkeley if you've got flat rents, higher construction costs, and an affordable dynamic that is unchanged from 4 or 5 years ago.
Yeah, what sometimes this trap that cities get caught in is they time their their fee changes wrong, and they act too
They
slowly.
over-optimize.
Yeah, they act too slowly and they miss the market opportunity, and then they change their inclusionary rate just ahead of when, and because who knows, maybe San Francisco rents have increased, but I
I think that's overly nice to San Francisco. Like San Francisco went and took a gun and started shooting at themselves in the planning department, right? And with the fee regime, and what the supervisors did in San Francisco, unless you're either a moron or you knew exactly what you're doing. Pick one, right? You don't get to pick a third option, right? So if you take the cost of doing something and make it significantly higher and significantly more difficult, you either understood your fact you're going to produce less housing, or you're stupid. Pick one. You don't get a third option, right? And what Aaron Peskin and this group of absolute morons did in San Francisco is they created a dynamic where it was virtually impossible to build anything. The two biggest levers to create more housing that cities and counties control is the timing of when you pay the city fees. So the ability to finance them and amortize them as more of an operating cost as opposed to a capital cost would have a huge impact. And the second one is the no-brainer of no-brainers, which is what's your biggest operating cost as a building? It's the property taxes. So if the idea is like, hey, we don't have enough housing in this 80 to 120% regime, it's simply to expand the usage of the welfare tax exemption to not be so narrow. So if for example, we said, hey, we don't have enough 120% housing, as long as you're balancing to 120 instead of balancing to 80, this building is exempt from property tax, right? That gives you a whole 1.5 in your return on cost. This would be the biggest lever to doing exactly what Amir is saying, which is diversifying the types of housing we're getting, because it would make all sorts of different types of housing now pencil, right? So when you look at a student housing project, why did these get all built, right? And why did they get built downtown? We didn't build anything else. It's because the rent's $10 a square foot, right? So you can make anything pencil, right? If we want to get stuff to pencil that's a 1-bedroom, that's a reasonable price, let's say a 1-bedroom's 800 square feet, so we want to be able to rent it for, let's just say $5 a square foot or $4 a square foot, that's $3,000. The only way in God's green earth you're going to make that work is doing something to your biggest expense line item, which is the property tax. Everything else is just moving the deck chairs on the Titanic.
Okay. Let's bring it back to Berkeley, but that's some good insight. But pivoting, we're talking a little bit about fees, constraints. So as Berkeley seeks to distinguish itself from other Bay Area jurisdictions, make housing more attractive both for development, production, and then for people to live in that housing, what do you see, or what are you seeing as the biggest constraints? Is it land use policy, community opposition? Is it construction costs? What are those hurdles you're encountering? We can start.
It's just the cost basis for new development is astronomically high. So, all the things that the city can do to help reduce costs. We talked about this last week, but we had done an analysis just to look at the cost of a multifamily building, 100-unit development with some $50,000 a unit for the land, and using some reasonable construction costs, and because it's over 50,000 square feet and would be subject to the hard hats ordinance, basically and I would include the hard hats ordinance as a part of what a city fee is. The project, if it were to be built as I just described, 28%, 25% of the total cost of the project would be from city fees. So if you take out the hard hats, it comes down to about 18%, and if you start to reduce other city fees, plant check fees, etc., you can get it down to below 10%. These are meaningful changes that I think could be made, and I think if the cliff that is being described, we do see it, and I fear it, again, as a resident of the city. If that cliff happens, then I think these are all the things that we need to be looking at is, how do you create a fee structure, an environment that allows some of these projects to proceed? Again, the city can only control certain things, but I think it's important to control those controllables and not shrug, and I'm not saying you are, but I'm just saying it's relevant. The things that you guys do at the city level, I think makes a meaningful difference in terms of the outcomes that you're gonna see.
Yeah, I think you can see it really playing out with some of the upcoming work, right? I mean, it's gonna be difficult no matter what to build anything over 50,000 square feet because of the hard hats ordinance. But then, there are things that are helping the bottom end, bring up, maybe some of the projects that would have only been 4 units are now gonna be 12 to 16. So I think those are some of the levers that are setting some of those constraints on more of the project type that we'll see moving forward.
I think going back to where Amir started the conversation, the city focusing on what they can control is definitely the right idea. So it's, how to deal with these fees and maybe collaboration with the county on something to do with property tax. Another big one, the for sale environment has been basically producing, how many condos have been built in Berkeley in the last 30 years? 0, right? So, the biggest issue, so let's say, what are the types of housing we want to have? Let's say we broadly can say we want all types of housing. So what are the areas where we can move the needle, right? So on the for sale front, for example, if you want to do a for sale project in Berkeley, one of the problems that we have is, if you're using density bonus, for a for sale project, the what you're losing on a per unit basis in your impact fee is astronomical, right? And it's not necessarily in the public benefit. So like we're doing a project here in Berkeley, which we're really excited about. It's a for sale project. They're gonna be 3-bedroom and 4-bedroom houses, assuming my dear friend 2 seats over approves it, right? And we're using a density bonus regime. But instead of paying a nice big fee into the city affordable housing coffer, we're gonna be selling one unit at 20 cents on the dollar relative to its market value, maybe as low as 15 cents on the dollar, which for whoever, I highly recommend about 18 months from now that everybody watch the units that are coming available because someone's gonna get one awesome house. But that's not necessarily a public benefit, that's a lottery, right? And so I think that there was a way that the city allowed, even if they were getting a good chunk of change, that money made its way into the city's affordable housing coffers instead of sitting at the project and maybe wasn't quite as onerous as the calculation that we're getting from the state because it's an 85% tax on that unit. Now, in the particular anyways, that's one idea, so sorry. So being able to pay an in lieu fee for density bonus projects as opposed to having to provide it on site, number one. Number two is this timing of fees and the fees in aggregate. And if we're gonna be honest with each other, is there an ability to remove hard hats, right? Hard hats is a 30% increase in your costs, on certain types of projects. So if you go from a concrete frame building and you add the hard hats requirements, it's not as significant, but nobody's building a tower in Berkeley anytime soon. But on a wood frame building, it's probably a 30% increase in your cost structure. And I don't know, we all know why it got passed, right? But there's no part of that was pro-housing or pro-community, so.
I did want to get your take on it, Jordan, also, in terms of, from your end, what appear to be the biggest constraints on producing housing?
Yeah, you mentioned, you were asking policy and community. A lot of them are interconnected, right? I think because of the perception for a long time, for decades, was that community opposition was the biggest barrier. I think a combination of new state laws, local political leadership has changed that, and that's probably not even in the top 3. In fact, sometimes we'll have projects that go to our zoning adjustments board, a new tower in downtown Berkeley, and we don't have a single community member to speak up in opposition to the project. I think that, so it's kind of a different environment. I just would echo what Amir says. The cost of of construction and getting a project off the ground, recognizing that some of those costs are related to not just, you characterize it as city fees. I mean, some of them are fees, but a lot of them are policies, right? Policy choices.
Those are fees.
Well, it's not, when I hear fee, I think of money
going to your pocket.
that's helping to support the city services that we all rely on, right? Like, and enjoy and need and appreciate.
I lump it in as like a set of controllables.
Yeah, I get it. And yeah, and there's policy choices. Thankfully, as I've mentioned, we are not at a frozen pipeline, right? And yeah, I've heard you fear that cliff is coming, and it might be. And at that point, I think the city will really need to take a hard look at our various policies and see if intervention is required. You know, I'm not sure. I won't speak to the political choices, or I won't opine on the political choices. I have heard some people suggest, like, oh, maybe we need to increase the square footage threshold for the hard hats, because 50,000 square feet is pretty low, and a project of that smaller scale, which is, I think, a really valuable and important project typology for Berkeley. And a project at that smaller scale might not be able to support the added costs associated with that policy. So it's a series of policy choices that thankfully aren't up to me to make.
Great. All right, so we have the Q&A option on screen, and I want to preserve some time for that. So I'm going to just go down the line now. This is my last question. This is the lightning round question. So if you could use a magic wand to change one thing about housing in Berkeley, what would it be? Let's start with Derek.
I think larger, more efficient projects. Pencil better. Good for the city.
Great.
I'm really excited for some proof of concept middle housing projects to move forward. And I would love to see the middle housing pipeline unlocked. I think it's a huge deal for equitable housing development, creating housing opportunity in neighborhoods that for decades have blocked new housing, neighborhoods there. And I know this is supposed to be a lightning round, but I just want to talk to this point about, yeah, sure, if UC boosted its enrollment, like that would do great things for the housing pipeline. But I agree, Amir, the growth in Berkeley is not dependent on the university. We have some of the very best schools in the Bay Area. We have fantastic parks. We have and other amenities that are really unmatched by a lot of other cities. We have a fantastic location. We're more centrally located than a lot of the outer suburbs. And there's huge demand, and I think for that middle housing product type, a lot of people, the regulations just went into effect on November 1. And so a lot of developers, there aren't as many developers doing that smaller project type, but if I can wave my magic wand, I would see a rush of new middle housing project applications coming in.
This is where being a bad student comes back to haunt me, because I know you sent this question to us and I didn't prepare a lightning round response to it. I think, again, the idea is if you can find a way to lower the fee structure and allow, like you said, either the threshold for hard hats increases above 50, or it's not applicable to a certain product type that's wood frame. Everybody who came today saw the folks outside handing out the flyers. This notion of pitting the development world against union labor is silly. It just, unfortunately, it's a math problem. The same analysis that I was describing earlier, where we looked at what the cost structure looked like, if it's costing you $700,000 to deliver a unit, you're just going to have to make some assumptions about what it needs to sell for or rent for. It's just not that complicated. And that's, if you want to attract investors, I suppose if you're an individual with the ability to stroke checks for all this stuff and you have a 50-year view, so a lot of these things don't apply. But that really isn't the world most people live in.
Too old for a 50-year view on that.
Yeah, right, exactly.
Look, I think just to pick up on what you were saying, like if we want to meet Jordan's dream of more middle income housing typologies, what can the city do to help that happen? And if I were to stroke one wand, I think, and to Berkeley's credit, there's an enormous amount got built in a short period of time, right? But I would say it's a little more coordination between planning, building, and the housing department would be helpful from a predictability standpoint. I would say number one. Number two, it's the processing time, right? Like, what can we control? And I would say the planning department may not be actually much of the issue at this point, but like the processing time when you get to building is a thing. And what building's doing not being in conflict with what planning approved, I would say is another one, right? And then the third one is, okay, if we really want to see 80 to 120 production, we should create an incentive regime, which is not solely on a city to do, right? But in San Francisco, we should just copy what they did for office conversions to apply to 80 to 120. I mean, they created a very tangible system, right? Which is that you take the incremental, when you buy an office building in San Francisco for this first 1 million square feet, okay, I don't know if everyone's familiar with this, right? In certain zones, there's a 50% reassessment on the incremental tax bill. So if you bought a building for $10 million, you invest $100 million, you pay taxes on $60 million, okay? So this is going to create office conversions in San Francisco. And the guy who did the biggest office conversion in San Francisco history, Oz Erickson, at 100 Van Ness, is now doing a second office conversion at 150 Van Ness, right? So if we in Berkeley want to be an innovator in this 80 to 120 space, the answer is really simple. We've got to go after, as Amir was saying, the things that we can control as a civic society, which is it's the fees up front, it's the processing time, and giving some relief on the property tax assessment that occurs for that type of housing, right? It's not that complicated, and remove the need to have a nonprofit involved. Because one of the problems when you want to do a small project, so we have lots of these nonprofit structures, right? They cost a lot of money to set up and they cost a lot of money to maintain, right? So if we want to build, let's say, a 10-unit building, Jordan, and we want everybody in the building paying 120% of AMI, is that a fair goal? What's the goal?
That's moderate income, sure.
Okay, then what we need to do, that building cannot afford to pay property taxes, period, right? And so, it cannot afford to have this complicated entity structure where you have a nonprofit as your administrator. This is ridiculous, right? And so, if that was a true priority and we wanted to see something happen in 24 months, these are the three things that we should do and advocate as a city. Improve coordination, reduce the fee load on those projects, and get the city council and the county to work together like they did in San Francisco to create a special tax regime for that, and you would then see that happen.
So much for lightning.
Yeah, we got, that definitely went on for a bit, but we do have some time for some audience questions. So we'll start here. Jordan mentioned no transportation impact fees in Berkeley. Can you speak to the traffic engineering plan check fee set by council resolution in around 2008, updated again in July 2025, and with SOSIP in place, and I'm not familiar with that acronym, but is this a double up? So take it away, TG up there.
Who's out there? Who asked me that question? Yeah, I mean, we have the transportation engineering fees help to cover costs related to impacts during construction, the costs of public works inspectors going out there to do plan check, to as many of you know, particularly if a high rise is going up and that construction period is gonna be 18 months or more. It has a lot of impacts to the surrounding community, and so there are fees related to mitigating those impacts. We also have, when the downtown area plan was adopted about 15 years ago, it created a streets and open space improvement plan that includes some improvements that some of you might be familiar with, like converting Shattuck Avenue, the western, where it splits just south of University, converting that from one-way to two-way. So that was one of the most high-risk pedestrian areas, and those improvements have made it a lot safer. And And a lot of that traffic is generated by new development. So we do have a streets and open space improvement fee associated with downtown projects only. No, that does not constitute double charging. Those are two different fees.
Excellent. All right, Derek, I'm coming to you for this one. Is middle housing in the same scale as Mr. DeLonzor's larger projects? And how do you approach these separately?
Yeah, they're very different to build. I mean, I'm sure on your entitlement side too, pushing it through. They pose their own set of hurdles and challenges. You look at middle housing, and even something that I would say, PG&E, right? It's still complicated on a lot of levels, and so you're never going to get the same quantity of housing from middle housing as opposed to some of the larger multifamily projects that have been happening over the last 5 to 10 years. So I think it will be important to figure out how to bridge that, because I personally do really believe in middle housing. I think it's very important for young professionals that want to stay here and have a family to have that housing type available. However, you're not going to get as many housing units per year building 12 to 16 units as you would when you're building 120 to 200 unit projects.
All right, questions are flooding in here, so this is a good one. Isn't it true that Berkeley has a housing affordability crisis, not a housing crisis? Is there anything that would incentivize developers to make less money so more projects would pencil out more easily? Riaz, you wanna take a stab at that one? Please try to keep it as concise as possible.
Yeah. This whole idea, when did California work well from a housing standpoint? Right? The 1950s, the 1960s, the 1970s. Okay, what does all of that predate? And no one wants to be here that long, right? But it predates all this nonsense, right? You have a bunch of people that made a ton of money building affordable housing out in the Eastern East Bay, the Central Valley, etc., right? And so the idea that the problem is developer profitability is not a reality. The problem is that we've over-regulated an essential good, right? And so it's not just a planning issue. Like the building code I'll give you a funny example, okay? We're buying a house from a very famous former developer to build a house for my less famous sister, okay? This house basically had a full seismic upgrade in 1996, okay? We go and change a window upstairs and we are rebuilding a 60-foot foundation, okay? But that is the level of change in the California building code over the last 30 years, okay? So what needs to happen if we want to make life easier, and going after the California building code is not something anybody on this panel has the power to do. But Jordan, I think you're all powerful, but I don't think that you have that power, right? But what needs to happen, it's a ratcheting that has occurred over 40 years, where at the building code and planning level, we have regulated ourselves to death, right? And what needs to happen is say, okay, is it really important, what of these building code items are important? I'm not saying to compromise life safety, but okay, maybe the way the plumbing system works. I'll give you an example. We have a building, okay, that was built here in Berkeley. It's a middle income building with zero public subsidy. We have 122 units of 80 to 120% AMI housing that Jordan approved, right? We've leased up the workforce housing side of the building in 90 days, right? It's totally full. We have a combination of students, working professionals, etc. I had to separately meter every single unit for electricity and water. This is asinine, right? The idea that, how much water are you using in a studio apartment? These people don't cook anymore. They barely do laundry, right? And okay, everybody pisses about the same amount. Why do we need to separately meter this, right? We have to separately meter the electric. This is the problem. And this whole idea that we don't want people to make $1, right, because it's not in the public interest is, I don't know if it's half the problem, but it's at least a third of the problem facing housing production in the great state of California.
Can I just
Quickly, yeah.
Yeah. I mean, at the macro level, just the return that development is supposed to produce in an urban market is somewhere between 5.25% and 6%. based on its return on cost. That's a 6% return. So it's but this idea that somehow developers are minting money left and right, those are the metrics we use to try to attract capital. The developer fee is anywhere from 2 to 4% of the project cost. These are not, the dollars get big because the budgets get big, but that doesn't necessarily mean that the investor that is putting money into a project is expecting, a 12% return on an annual basis, and therefore, we're trying to jack up the cost to rent something. It's just a function of, if it costs you, like I said, $700,000 to build a unit, you have to have rents or a sales price that supports getting investors interested in that. And it's a bad place for us as a community, I think, to be. I don't think that's the right long-term place for a community. But, there's just a certain number of things that we can control, and I just keep coming back to the same idea. Because of that, we ought to be controlling the controllables.
Absolutely. All right, we did get started early, so let's get to one more question before we wrap up here. What could possibly stimulate construction of more housing in downtown for adults, not just students? Could it be condos, and would the state law have to change?
Yes. You gotta get rid of in order to get condos to work in California, you got two things that gotta happen. You've gotta change the deposit rules, which basically make it so that you cannot take a deposit into the capital structure until after completion, number one. And then we have got to get rid of the liability threshold. You cannot buy an insurance policy for a condo building, right? And you don't know what market you're delivering into. This is business 101, right? What needs to happen is we need to move the threshold for liability to gross negligence. Like, you bought a condo in a building. Sorry, my dear friend, like, that comes with the fact that you now own a share of a building, right? And if you don't want to do that, don't buy it, right? But this liability insurance and the deposit issue are the two big issues preventing condos. There's nothing Jordan can do to fix that problem. But if people want more for sale housing production, email your assembly person, email your state senator. Like, they need to change the law around the liability issue, number one, and number two, around the deposits. Because the trials lawyers own California. We're not gonna fix the liability situation, but the one thing that we can hopefully fix is this deposit issue.
Well, I thought there is a bill on the liability issue that's going through the legislature. I think that it's doing pretty well. Like, it's something, somebody in the crowd probably knows about, is more up on what's happening with that bill, but I think Assemblymember Wicks introduced a bill that addresses the liability issue.
To gross negligence?
I'm not sure to what standard it moves it to, like if it moves it as far as what you're talking about, but I know that was identified as an issue, and I think it's moving through the legislature positively.
Maybe I'm wrong.
I would just say, I think I'll come at it from a different perspective. I think if in the city of Berkeley, a new office building that is able to increase the daytime population were to be built, I think it would then shepherd sort of a new wave of demand on the part of people who want to be living close to where they work. And so it wouldn't necessarily be student housing, but it would be, just historically, I think the city has struggled with Class A office building development. But if someone were to take that risk and build it and it were successful, then suddenly you've got a lot of people in the downtown.
Amir, you build a grade A office building in downtown Berkeley, I will personally pay for a statue of you. I will personally pay to donate a for you. I'll make a whole statue. Amir built this beautiful office building for the great people of Berkeley.
I can't believe it hasn't come up yet, but UC is actually currently building 2 Class A office buildings in downtown Berkeley right now. And so it's happening. I'm not excited that the city won't see property tax revenue from it, but I am really excited about what it's going to do to help, I think, prove the concept that there is demand for non-student housing in downtown Berkeley. I think we're at a precipice of a huge opportunity. Looking at a local density bonus program for condos as well is a policy thing that our City Council has already referred to us. So I think a combination of factors, I think we could see that in the next few years.
I love the spirited discussion here. We're coming up on time. Derek, can I quickly bring you in here from a GC perspective on the construction side? Are you looking at condos as a feasible option? Kind of what is your take on all this?
Well, it's tough. It's harder to make everything pencil at that level. You know, in terms of time to build. You know, all the steps that we have to go through to get something built at any scale is going to be somewhat similar in any kind of multifamily, and so it is a lot harder to get those projects to pencil. But anything under 50,000 square feet, that's what we're really seeing as the projects coming up right now. So.
Excellent. Really fascinating conversation. We do have to leave it there. Let's give a big round of applause to all of our panelists on our Can Berkeley Deliver the Housing Needs panel. Spirited conversation. A lot to talk about. It got heated at times. We like that. We will take about a 35-minute networking break, so feel free to make your way back into the networking area. Grab a cup of coffee if you haven't. Stop by all